The market's been waiting all week to hear what Jerome Powell has to say at his Jackson Hole speech. Well, it didn't really matter what he had to say. This is the 5-minute bar from the time that he stepped up to the podium. You would think that he said, "Hey, everybody, we're cutting rates in September," that was his opening statement. Didn't happen, not even remotely. He probably learned his lesson a few years ago when the Fed had been hiking interest rates at the fastest pace ever to head off inflation. At that time, the market was looking for a pause. It wanted the Fed to stop raising rates. And it was looking for a September pause, and he came out and said, "No, higher for longer." Well, the market tanked on that news. I remember trading that event. He learned his lesson and he didn't repeat that mistake. He wasn't going to give us a whole lot of information this time around. He was going to stay balanced. And in fact, if we look at where the Fed officials currently stand, more than half of them don't favor an interest rate cut right now. So he left the door open. We're going to continue to monitor employment conditions. Yes, we're seeing signs of deterioration. Yes, we're concerned about it, but we're also concerned about inflation. So we're kind of maybe sort of leaning toward a rate cut in September, but we're still going to wait and see. That's not the type of statement that would generate this type of reaction. The market wanted to rally. It wanted to go higher. We made a new all-time high today. So let me take a quick look at our last pick, and that pick was BE. Now, this was in the live event. I did give you two picks. I gave you Adobe on the short side. I gave you BE on the long side. And I mentioned to you, we're really not taking any swing trades right now because we don't know which way the market can head. But here's a long and here's a short that I think will perform well. So once that news came out, you had an opportunity to get long BE somewhere probably around the $48 level or so. And it did have a nice 70-cent rally. So it was a decent pick. ADBE, you should not have even contemplated shorting it once the market showed you that it wanted to go higher. There's no reason to take a short position. I simply wanted to give you a couple of different stocks that you could look at. And so if we take a look at the D1 on BE, I've loved this. I've been highlighting it in recent weeks. You can see how the stock continues to push higher, breaking out to a new all-time high right now. Didn't even pull back with the market this week. So it's been a really solid pick. Speaking of which, let's take a look at what happened with the market this week. We had a very light news cycle. So we're going to go into the 15-minute chart so that we can zoom out and see what happened. We did have a little bit of profit taking. This is the price action on Tuesday. Had a little bit of volume coming in. We had some of the tech high flyers sell off. And so that was a little curious because the market never got off the deck. That was persistent selling. And then Wednesday morning, whoosh, we had this big drop. It certainly looked legitimate, but it wasn't. Just like every other move that we've seen of this nature, buyers came in and they scooped it up. And then today, the door was slammed in their face and the market made a new all-time high. So it's not time to short, most definitely. If you can find really strong stocks that have pulled back, that have dipped, those dips are going to provide you with a good entry point, and the market is still looking to go higher. So let's take a look at Friday's price action. I'm recording this early. I won't be doing a Sunday video because I'm going to be traveling and I won't be able to get it out until very late Sunday night. So I thought, why don't I go through, give you a pick for Friday, tell you how I think the market's going to play out today, and then it'll provide you with an opportunity. I'm going to try and get this video out before the close. So what do we got going on here? Well, this is basically like a gap and go formation where the market gaps up. In fact, you can see how we've had this steady float higher to the all-time high with these tiny bodied candles, and now the price action has leveled off. That's what we usually get out of a gap and go formation. They're dangerous to chase because we don't know if we're going to get a gap reversal or not. So by the time you wait for confirmation, the move is pretty much exhausted. So the only way that you can really trade this, the only way you should trade this, is you should patiently wait for a market pullback. And these market pullbacks are going to look real convincing. When I say real convincing, it's going to look like maybe the market is going to give up all of its gains. Maybe it's going to roll over and play dead. Don't make the mistake of getting short. Don't do it, because that's not what's going to happen. What's going to happen is eventually you're going to get a gradual drift lower like this, and you're going to get some green candles in here that excite buyers. So anybody who's looking to buy this dip is going to get really excited. They're going to come in and they're going to go, this is it, this is it, this is the bounce, we're going to a new high. And then the market will continue to drift lower. Same thing here, you got a green candle. You're going to continue to drift lower, and then there are going to be still some green candles that poke up. Don't chase those. Now, I'm going to show you a play. This is a trade that we do on Fridays. We call them Lottos. We need to make sure that we have the market lined up for these Lottos because we're looking to buy very, very cheap call options in this case, very close to the close in the last hour of trading. We want to be able to buy these options for 10 cents, 20 cents, and what we're looking for is all that time premium to come out of them. This is a very low probability trade, meaning most of these options will expire worthless. So what we need to work on is the probability side of the equation because we never want to lose money. However, it is a high reward, low risk trade. Well, what does that mean? Well, if you're only paying a dime, 15, 20 cents for these options, you're not risking a whole lot. The potential is for them to double or triple, but we have to have everything lined up. This requires more precision than any other type of trading that you're doing because we don't want to go wasting money on Friday afternoons. And most weeks, this trade does not set up, but I'm quite confident in the pattern that I'm going to show you that, yeah, I do believe we're going to have an opportunity to do this week. And so I've got a stock that I think is going to set up well also. So we'll take a look at that. If I were here the entire trading session, I'd be hunting, searching for the right stock, but I'm not. So I'm going to have to go with what I've already found. So here's what's going to continue to happen. All these little bounces are going to excite buyers, but they're not going to be the real deal. You'll even get some shorts in here who want to take advantage of this move and who feel like VWAP might fail and like all these gains might vaporize. There is that crowd, and they're going to be disappointed late in the day. So be patient. Do not bite on these early moves. Wait for the market to come in. Wait for that compression. So as the market's drifting lower, don't expect the bounce off of a tall green candle like this one. Not going to happen. That's just going to lure you in, and then the market's going to continue to fall back. Lure you in, market's going to continue to fall back. Even when you're compressing, you're going to see a nice, tall, green candle that looks like, oh, we got a compression breakout. This is the one. That's probably still not the one. What I'd like to see is a bullish hammer like this off of that compression. So boom, it looks like finally the market's going to sell off. And while this candle is forming, this 5-minute candle, it looks really red and it's breaking through the low end of that compression. And then at the last second, buyers come in and it closes near its high. That's what we want to see in the last hour of trading or so. I don't know exactly when you're going to see it. It could be 90 minutes before the close. It could be an hour before the close. Wait for that formation. Wait for those last shorts to be lured in and wait for signs that buyers are finally ready to come back into the market. So drift, drift, drift lower, compress, 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 not biting on any big long green candles. We're waiting for something like this bullish hammer, and it usually is going to be followed by a tall green candle. And once we get that set up, whoosh, the market is going to shoot higher. The longer you can hold off on buying, the better. Because time premium decay is accelerated, these options only have an hour worth of life left in them. So we want to buy them as cheap as possible. What about next week? So let's take a look at the market. How are things shaping up for next week? We have, by the way, this is the market running higher. There's a bullish flag right there, and you can see how we're flirting with the all-time high. Yes, chances are we're going to close at a new all-time high today, Friday. So that's what I'm predicting, and I'm showing you how I would be trading that move. As we go into next week, again, not a lot of news. NVIDIA earnings is going to be the big event. Is NVIDIA going to blow the doors off of the market and rally 10, 15%? Probably not, because it's priced for decent results. So I think that the news is going to be very favorable. A lot of the tech stocks, take all your big tech names, take the 10 biggest tech names, they really haven't rallied that much after announcing earnings. And NVIDIA is probably going to be the same. It's going to be good, but not good enough to spark a huge market rally, not bad enough to spark a market sell-off. So I'm looking for the market to basically be in this holding pattern where it just gradually inches its way higher. And what's going to crack the market? When is it going to sell off? Well, if we start seeing a few months, not 1 month, if we start seeing a few months where we've got higher unemployment and we have higher inflation, okay, both of those are trending. That stagflation scenario that the Fed has painted for us is actually playing out. Now what do? Do they cut rates and do they try and avoid an economic recession, or do they hold off because they're worried about inflation? They're kind of stuck between a rock and a hard place. When we start seeing that, and if we start seeing prices really spike because of the tariffs, then we should see a market sell-off. But as it stands right now, this market is extremely resilient. Every single dip has been bought, and these dips have been brief and shallow. If we saw some decent selling in here where we had long red candles, at least down to one of the major moving averages, okay, fine. That shows us that at some point in time, sellers were able to take control. We haven't seen anything remotely close to that. We just get these little dips and they're instantly reversed. Tiny dip, instantly reversed. You saw me talk about this in the last video. So what type of stock would I be looking for? I've got one that came up in my Green Royal Flush search, and I'll show you why I like it. So here's Texas Instruments, nice strong rally, earnings there, big drop after earnings. The stock forms a base, finds support at these major moving averages, and now it's been inching its way higher. So I don't feel like we're chasing this stock. It's actually pulled back a decent amount. So that gives it plenty of upside room to rally. So it gets above this 50-day moving average, and now it is in this gap. And today it looks really strong and it's got decent volume. So what would I be looking for? If we take a look at where VWAP is, it's at 207 roughly. So if it can pull back to this low right here, which found support above VWAP, that was around 207.05. Great. That means that the 207.50 calls are going to be just out of the money. Perfect. Because that's going to set us up with a nice end of day rally. And we can see that the stock has already been up to 209 at its high of the day. And it has a chance to get back to that level. So you're going to be waiting. And if that happens, those options are going to be worth $1.50. Well, maybe the stock doesn't quite get back up to that point, But what we'd like to do is we'd like to be able to buy those 207.50 calls on Texas Instruments as cheap as possible. I'm talking like a dime, 15 cents. And with any kind of pop in the stock, let's say that the stock gets to 208, which 208.31 was the high right here. Well, those options are 80 cents in the money. If you bought them for 15 cents, you're going to be able to sell them easily for 30 cents, 50 cents. That's going to be a really nice percentage gain. And the way that I like to trade these is because you're dealing with swift stock and market movements in the last 15 minutes of trading. What I always like to do is I like to, let's say I buy the options for 15 cents. I'm going to immediately put an order out to sell half of the position at 30 cents. So if I get that double, now I can't possibly lose money on the trade because I've already covered what I paid for those options. The other half of the position can run as high as it wants. And I'll set limits out there so that the market makers take me out as the stock continues to move higher. Because if you're out there trying to hit bids, it's just not a good way to exit the trade because they'll widen out those bid-ask spreads. Maybe they'll make them a dime wide. So you're always at the mercy of the market maker. Realize that these options do have intrinsic value, so they do trade at parity. So if the stock goes up to 208, those options have to be worth 50 cents because there's an arbitrage opportunity. So use the in the money amount as a gauge of what price you might be able to get out at. But those are Lotto trades. They are a tiny little portion, minuscule, not even 1% of the trades that I do. But it's a fun way to end the week. And it also sets up well today because of the price action that I'm seeing unfold. So here you've got a compression starting to compress. Is this the one? Probably not, because we've got about 3 hours left in the trading session. I'm looking for a continued leak lower to get just above VWAP perhaps. That's where I believe we're going to start to see support, and it's too early for the market to rally up right now. So let those option premiums get super cheap. So I wouldn't even pay more than 10, 15 cents for those options, and the stock has to be below that 207.50 level to really get those premiums to come in. That's the trade that I would like to do, and Texas Instruments is actually my long because I like the stock to move higher from this point on. It's got plenty of upside potential. It's starting to fill in that D1 gap. It's had decent volume so far today. So this would be a natural support level. That would be your natural stop out level also. So you're not too far away from that stopping point. So I like Texas Instruments to continue to fill in more of this gap and perhaps even challenge the high as long as the market is still strong, which it should be. There's no news. There's nothing to throw a wrench into what we're currently seeing in the market, except for lots of weak economic data points, because everything else has pretty much been thrown at the market. We've had weak employment numbers. We've had weak ISM service numbers. We've had hot inflation. Japan's exports were recently released this week, and their exports fell by 11% in June and 10.5% roughly in July. These are exports to the U.S. Why did that happen? Shouldn't we be seeing good exports to the U.S. because they're still front-running the tariffs? The tariffs didn't kick in until August. So why are we seeing these light exports to the U.S.? Could it mean that we're still working off all of the front running that happened earlier in the year and that inventories are way built up? If that's the case, then we're going to start to see new orders drop off significantly. So I'm just pointing out all the warning signs that have been out there. There have been plenty of them, but the market doesn't care. And we see that in the price action. So in this environment right now, I'm still keeping my trades very short term. This is a nice setup here. Watch for this market to leak lower. It's going to lure in some shorts too, believe me, because this is going to look very convincing. Like, oh, Powell didn't say anything. The market's just going to roll right over and it's going to sell off. This is actually pretty strong price action because we had this big move and we've been able to preserve all of these gains. And the only way that the market can do that is if buyers continue to come in and support the market. If this were all fluff, what you would see is a big spike up like this. Long red candle, long red candle, long red candle, long red candle. Reverse that move instantly, because when you have bona fide sellers with size, they will play whack-a-mole with the market and they will drive it right back down. When they're not able to do that, it tells you that buyers are still in control. So as convincing as this little pullback might look, it ain't happening. This market's going to find support. It's going to rally late in the day, probably challenge the all-time high, close the weekend on that positive note. So that's what we're going to be trying to take advantage of. That's all I've got for you today. Again, next week, not a lot of news coming out. NVIDIA earnings, probably not going to hurt or move against, it's not going to hurt the market. It's not going to rally the market. It's just going to be another data point, and the market's just going to continue to kind of float higher. Any stock that you're currently considering for a long position, I would focus on stocks like Texas Instruments that still have a really nice positive D1 chart, that have pulled back to a major support level and that are starting to rally off of that support level, because you've got plenty of upside room for that stock to move. And that means that your price action is going to be consistent as that stock tries to recapture that high. So you're going to have nice, consistent price action like this because there's plenty of room to run, versus stocks that are kind of meandering and breaking out to a new high. Many of those, green candle, red candle, green candle, red candle, no real net change. Those positions are much more difficult to stick with because the stock is hitting a resistance level. These stocks have room to run. So focus on those. Have a great weekend. I will be recording a video next Wednesday or so. Thanks so much for watching. Make sure that you watch our live event from last Wednesday. Lots of great questions asked and answered, so very educational. And please leave your comments, subscribe to my YouTube channel. I want to reach as many traders as I possibly can, and if you do that, it's going to help me get better ratings and visibility on YouTube. Thanks again. We will see you soon.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.